presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your lovable and huggable host. And it's a beautiful February 18th. Starting to get a little cold. I had to put on my hoodie and my footy pajamas. I won't show you those though. My footy pajama bottoms. It's starting to get cool down here, and actually may even hit freezing. And we all know how much I'm the princess in the pea. Anything getting close to that temperature, and my hair might get messed up. Anyway, we are, what else going on out here? It's kind of a interesting market. It had just a little spike on the FOMC meeting notes just the last minute. I think we were down to about, 2093 on the S&P cash, something like that, before they came out. Right now, when we are looking at the S&P cash, where's my S&P cash? Why is this thing all so messed up here? Okay, there we are. 2098.90, 2.01 billion shares as we start the show. So it is a low volume day. Yesterday was the third lightest volume day so far this year, and it's just quiet. And I think a lot of people are trying to let these the big move of the last, week, 10 days kind of digest itself as we kind of pushed up. And some days we had decent volume, some days we did not. And I think we're kind of at a decision point. Options show maybe we close a little bit lower. But as far as I can tell, it certainly looks like the short squeeze is on in a lot of these. I was hoping to get a little bit more of a retrace before Friday morning, where I think we'll be buying options late Thursday if everything works out the way I think it will, for a little bit of option madness on expiration Friday this week. And had a couple of emails about short squeezes and what I'm looking for and how I'm looking for it for Friday. So we'll talk a little bit about that. But as always, we'd like to start off the show with a little history.
Just a little bit of history repeating.
And as they say, if you don't know your history, you are doomed to repeat it. But I digress. On this day in 1700, Daniel Bernoulli, one of the giants of probability theory, the father of modern risk analysis, is born in Basel, Switzerland. And one of the reasons why they have the Basel Accords and a lot of stuff up there in Switzerland, I think he started a foundation. And a lot of people, financial kingdom was built, over 300 years ago now. He was a very smart guy and very into the beginning of statistics. He showed in 1766 his analysis of a smallpox vaccine. And they basically go after the lesions on people, get a little bit of the serum out of it, and heat it up a bit and put a cut on somebody and put in the smallpox and get them to have a nice ability to ward off smallpox. And he proved mathematically how well the idea of using vaccines worked. Strangely enough, we have a lot of people that don't know that almost 300 years ago, he came up with most of the ideas that showed how well vaccines worked. Of course, it's in the news every day now. Some people believing that vaccines don't work. I don't have any problem with vaccines. They've pretty much shown to be use of them seems to be great. It's the problem that no one makes any money off of it, so they're always doing it on the cheap, and that's where most of these vaccines run into problems, not with the efficacy. I can't even say it today, efficacy. Can't say it today. Sorry. But the absolute implementation of a business that doesn't make much money. And that's where most of the problems lie. But of course, pretty brilliant guy. And when we talk about all the things that happened, I think Denmark was in 1700, about this time of year, was invading everybody they could around them. They were the big cats on the block at that time. A lot of stuff happened in this year, but I won't go through it that far. But is interesting. I'm not expecting a big move in the S&P. We're going to get into charts pretty quickly here today. A very good day to start talking or asking questions. You can email me at path@tfnn.com. You can post a message in the den if you want me to look at something. And you can also, you can call us at 877-927-6648. But I'm not expecting a lot of movement until Friday. In fact, I would love to see a small pullback. The smaller probably the better, because my guess is we're going to get into Friday and we're going to be up somewhere around these levels. And a lot of people that have been short up here are probably going to cover going into the weekend. So I think that there's some opportunity for some white lightning unless we have a major surprise out of Greece. And, of course, they can always toss us in the grease, but I digress. Anyway, a lot of interesting stuff going on here. Let's get out of that and start bringing up some charts. We'll talk about some of the stocks that are actually moving out here and why they are moving. Let me update this. I've got to find my list of stuff. And Boston Scientific, one of the ones popping out here, announced agreement with Johnson & Johnson to resolve a bunch of litigation lawsuits that will make aggregate payments of $600 million to J&J over a number of years that I couldn't find out. But the price targets was raised to $16, and of course it's already at $16.50, so they're going to have to raise it again. Always reminds me of the joke about the guy that comes in with a cough to the doctor and says, I give you 6 months to live. He comes back in 6 months and he goes, I give you another 6 months. And that's pretty much it. Not a great joke, just a joke. Boston Scientific up on huge volume, though. And when we go back and look at this thing, it's everything you're looking for. Lots of volume and a sign of strength out there. I would have liked to seen the candle a little bit bigger today out here, but if this thing could come back down to about that $15 level, would be very interesting out here. But again, what else can you say about it? CVE, Synovus Energy. This thing's kind of knocking at the door of the lows. And seeing a lot of Gartley patterns in energy. And, of course, I almost thought that the energy numbers were going to come out today. They will come out tomorrow because, of course, we were closed on Monday. And so we're going to look at those at 10:30 tomorrow. But not very surprised to see crude off a little. And what do we have off here today? And we're off, $1.22 at 52.31. So not a lot happening in that. But I think there's more than a few of these stocks that have Gartley patterns out there that have pretty much been filled with Gartley butterflies. And we'll be looking at those tomorrow. Maybe there'll be a play in that sector. Anyway, on this one, it's kind of come through. It's broken the previous volume low of January 29th that had 3.3 million shares. Looks like this December 16th low at $16.11, 7.4 million shares. Looks like it's ready to get tested out in this energy stock. Another one out here is Diamond Offshore Drilling. And you've got some nice lows out here. Looks to me like you're going to get a test of the $29 level that we've avoided so far. I suspect if we go back down to 45 bucks, we're probably going to see Diamond Offshore test that $29 level pretty quick, unless we see some kind of brouhaha, in the Mid East. But can't really tell anything on that. Anyway, Flowserve. Oh, I forgot to say what happened on Diamond Offshore, and it was initiated with an underperform from BMO Capital. Flowserve is went right up and pretty much played in the heavy volume down day, and that is from the 28th of 28th of November, and this thing came down 2.6 million shares. It got up, pretty much filled this whole gap today with 3.5 million shares, but could not hold that high, which I think is kind of interesting. Of course, these guys make a lot of valves and pumps and that kind of stuff. Nice numbers out here on it today. Beat its estimates of 3 cents. Basically, revenues were in line, but it raised its dividend by 12.5%. So the question is, how long can these companies at low crude prices continue to go out there? The disaster du jour today is, of course, a fossil. I'd been trying to short this thing for a while. It was evident a year ago that this thing was in massive distribution. They kept on pushing and kind of, I'm going to say that their books were at least warmly toasted. It looked for forever that they were having problems in retail. And I just never understood how the books look like they were gently roasted in this company. But of course, they finally came out and told everybody what everybody already knew, and that is that smartwatches are eating fossils lunch. The Swatch is not the thing to be cool anymore, and why they have a lot of business in various areas. The lack of business, especially with the smartwatches coming on, they've blamed even the low-selling versions of Google's watches out there, smartwatches, and Apple hadn't even come on board yet. But this has been one that I think we tried to short it a few times out here in the last year, and I think we got a little bit of money out of it a couple of times, but very hard to see when this thing was going to snap, which is always a problem in shorting stocks, is especially when you've got the board of directors and the CEOs working against you to make everybody think that company's still good and whole and happy, but pretty easy to see. Maybe it could be in a problem with just too many people knowing that this thing was going to blow up, and the watch pot that never boiled. But it's boiling today, and the frogs are deep in there, and a little bit of French frog legs out here today for the fossil group. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. And what else can you say about that? We're back. Anyway, I had somebody email me about the Baltic Dry Index. And, all you need to do if you want to check it out is, of course, Google Bloomberg Baltic Dry Index, and they have the charts on Bloomberg's website. But we talked about it going into the last month, how the rates for dry bulk products are continuing to head lower. And it doesn't look like there's a bottom in sight right now. Eventually, I guess it goes to free. But we continue down, and they've continued down, which would say that, basically if you're shipping iron ore, wheat, or grains, or anything that's loose, that's not crude, it continues to be a buyer's market for getting a ship. And pricing power does not exist right now, and maybe that'll change, but I have a feeling if you are really bullish out here on this market, kind of tough to see how there isn't a lot of economic activity, but we continue to see higher prices. But it could continue for a while. As I said yesterday, the U.S. government is spending money at a wild, almost insane rate in the last 2, 3, 4 weeks, and my guess is that is part of the coordination between the central banks around the world to make sure that the U.S. does not fall back into recession, especially with the pretty major move in the dollar. But I do digress. What else can you say out here? Garmin down. I've been kind of surprised about how Garmin has been able to hold up when there just doesn't seem to be a great deal of reason for it to. Looks like it's going to head down to the $48 level. That's been a gap that's acted as a support. We've already got enough volume to go to the previous low of October 2nd at $48.67. The low is at $50.45. But what kind of, basically these guys are not selling a lot of devices other than kind of like GoPro cameras in Europe. Because of the way insurance works over there, everybody wants to prove that they didn't do something because it's all about the insurance scams in Russia. I know. You're saying, David, this is not the Russians I know. They're all such peace-loving and law-abiding citizens that they would never scam anybody. But I always wonder if that's what it's going to come to here in the United States. But Garmin's been able to sell a lot of these real-time dashboard cameras that just automatically loop every 30 minutes unless they get smacked real hard, in which case they quit recording in about 2 minutes after they've been smacked if they were in a car accident. But continues to be rather interesting. Anyway, down on heavy volume, the gap up that actually happened, that set this gap up that it's coming back to, happened on February 19th, 2014 with almost 9.4 million shares. So not enough volume out here today, but it's hard for me to see a company that's built on GPS and high margins being able to hold up these levels that look to me like over time we're probably looking more in the 30s on Garmin, but down on some decent volume today. But I do digress. Jack in the Box, what you don't want in this thing tomorrow is a much lower open, or you'll have a nice little abandoned baby up here at the top, shooting star, whatever you want to call it. But another one, the only thing I dislike and what you need to watch for these is just the very small candle part with long wicks out here. JACK, of course, is Jack in the Box. And, if you want to compare this to McDonald's, Head and Shoulders better. My brother used to work in Jack in the Box when he was in high school. I used to go up there. It was a horrible place. I don't know if they're any better. They all closed around where I lived, not shortly after. And there's none down here in Florida. But they were pretty bad. I understand there's a bunch of them in California, maybe. Maybe they're different. Maybe they've changed. But certainly Jack in the Box up on decent volume on earnings. Let's get the skinny on it, as they like to say, if I can find it. Jack beat Q1 consensus EPS estimates by 6 cents. Beat on revenues, issued upside guidance, favorable commentary on Mad Money, target price raised to $99 at Oppenheimer. Just want to watch this thing in case it does open much lower tomorrow. It could make a fairly nasty candle, but you've got tons of volume up here today. Not a bad week for trouble.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We were going to talk a little bit about a short squeeze, and I forgot about it and got into the charts. So let's go ahead and handle that now. I also got an email out here. Would you look at hack? Cybersecurity holds and what else we'll look at? So let's take a quick look at this, and then we'll get into the short squeezes. Larry from Detroit. And, of course, this is the Pure Funds, of course, technology shares ETF in this. A nice little pop back up here, kind of seeing a little dish. Kind of looks just like the same charts that we see in underlying for the big dogs out here like FireEye and Cyber. Was it Cyber? CYBER. CYBR. CyberArk, excuse me. These things took off, and it doesn't look a whole lot different. Of course, there's a handful of these stocks. Same thing, this thing gapped up with the rest of them. But, what you're looking for is a pullback to 2750 on this. And at that point, it would be very interesting. I think a lot of these stocks have a good future out here. The biggest problem has been getting to the point where or at least not losing money. And I think FireEye may have turned the corner out here, but it can still pull back fairly significantly. S&P futures out here getting a little bit of rock and roll, a little bit of country. And what else can you say? 2095.66 on the S&P cash, 2.21 billion shares. So light volume. And my guess is that we are waiting for the news on Friday where we're going to probably see a lot of volume. My guess is that they'll do anything to try to keep the EU together, even if it's not real, even if they just kick the can down the road and say that they can come back later. It's all about not letting this thing blow up quickly, but just like a bad movie, foreshadow it for 6 months until it actually happens. I think it will happen. I just think that what they're going to do is kick the can down the road again on Friday. We're probably going to get some kind of bounce out of it. As they say, everything's solved and everything is awesome.
Everything is awesome.
And maybe that sets something up. But I'm looking to make some money on some short squeezes. We talked about that. Larry actually had a question here. I bought it 2607 on 29. Would I like to know where I'd add and where you would put a stop? You don't want this thing to close below 2762 out here for the December 29th. This is on Hack. Really don't want to close below that candle. What's the low a day on that thing? $26.80. So that's pretty much where you want to, if it closes below that, that way you'd want to close the position on that. But my guess is you're probably going to get a nice little low volume pullback to this $27 level, and you should be fine. And that's where you would probably want to buy this thing or add to it if you were in such a mood to do so. Anyway, we're talking about short squeezes. A couple of days ago, I heard somebody call in from Tom O'Brien's show and try to talk about short squeezes in ETF. Short squeezes happen in individual equities. They happen because there are far too many people short for generally the market conditions and or a news story that comes out. Shorts are 10 times more likely to make an intraday trade than people that are just long. Much easier to move. And once, of course, you get a bunch of people moving in the short side, they are far more likely to cover, which means that even more people have to cover as if they short at even higher levels. And the short squeeze is all about getting the herd mentality to move. And especially, like I said, you come into a weekend, you've got a bunch of shorts, maybe not have a lot of people want to buy the stock, but all you need to do is get the shorts to start covering it, and it means more shorts will cover it, and you get a stock that can really move up. And, of course, if you're a big stock operator, nothing better to get a short squeeze moving and have people that have to buy to get out. And, again, shorts tend to be very, very short-sighted, very, very short time horizons, and are much more likely to be a little froggy and cover the positions, which again just starts more positions, almost like a nuclear chain reaction. And that happens a lot. So just keep an eye on them. But you, of course, most of it has to do with the percentage of people that are shorted. It is described on websites as days to cover, i.e. on the average volume for the last 30 days or 10 days or whatever the metric is for that website. They'll say how many days at the current volume would it take to get all the shorts out if everyone that bought a stock was a short. And of course, they'll give you that. And, if it was 3 days to cover, a lot of times you'll see some stuff like 10 or 12 days to cover. And those are the ones that I'm interested on for Friday, because they get it going into the close on Friday. They're going to get a lot of those people to move. If you can find one that's underneath a strike point and you can have a loser go to a winner, sometimes you can make some pretty good money. And that's what we're trying to do in at least the path of least resistance this week. We're going to look for some short-term cash to see what happens next week. But that would probably be prerequisite on Greece, at least giving lip service to some kind of deal. So we'll take a look at that. But it is what it is. Anyway, that was Hack. Did I have other things I wanted to look at? Zillow. A nice big candle, nice big sign of strength out here. Of course, they just closed their door. They closed the not the door. They closed a acquisition of their biggest competitor. And I think there were a lot of people short this thing, thinking it wouldn't go through, thinking it wouldn't be approved, or that it would blow up in somebody's face. But right back up to the previous high out here, 127.89 from the November 19th, 2014 high that had 3.6 million shares. Went above it. It's kind of hanging out just below it out here today with 6.2 million shares so far. But not bad out here. I'm not exactly sure, other than a lot of shorts, why this thing would be up in that area, other than people really didn't think this thing would pan out. I never really thought that much, but maybe a lot of people bet against it. But that's what you get when you get good news and a lot of people on the wrong end of the stick, which certainly those people were. SAS Limited. Want to look at Quaihu, just because it was very interesting to me, but also it is one of the few Chinese stocks out here that is testing their lows today. And of course, the December 17th low at $53.84, 4.2 million shares. We're looking at it today, getting into that, the low so far, 54.54. So we're still about $1 above that absolute low. But volume, 4.6 million shares already. So we're way into those candles with additional volume. We'd want to be watching that in the future. Is there anything, if we go back far enough? There really isn't. I mean, you've got kind of some support down here, probably 39 or 40, that goes back into mid-year of 2013, and then $25. And maybe Alibaba is truly going to eat everything in China. It's hard for me to figure that out. Maybe Quaihu isn't quite what they advertised it to be, which is probably a lot more likely out here. Anyway, we're going to get into some other stocks of interest. In the meantime, you can call me at 877-927-6648. You can email me like Larry from Detroit at path@tfnn.com, or you can post a message in the den. But very interesting. Let's take a look. I wanted to see, we had gold down fairly decent. It's now flat, so that's kind of interesting. See if I see anything else moving here in commodities. Up a nickel on silver. Not too bad. Let's take a quick look at the GLD. Yeah, we kind of had a spike back down. I would certainly love to see this 109.67 tested on the GLD, and I'd like for it to pierce it and have a kind of an intraday reversal down there to really mark the end of a long-term bottom out here in gold. And, 6.1 million shares, not all that much today. But certainly think we could get back into that 109.67 low from November 5th. And I would love for it to prove the point and finally say, enough is enough, and we've got a bottom in it. To me, this thing has continued to be in kind of a down channel since that August 27th high of 2013, at least from the upside. We haven't gotten a lot of, you kind of tried to bucket on the March 14th high of 2014, but we continue to, for the most part, make lower highs. And if we could just make one lighter volume low out here from that November 5th, 109.67 is what I'm looking for. And I would love for it to blow out and get everybody all into goldish. Just take a look at it. But I may not get my wish. Abbott Laboratories. This thing is right up at the highs. Some decent volume in the last couple of days. Light volume out here today. I wonder when this thing comes out with earnings. Earnings take a quick look. Okay, April 14th. So you got some time up here. But when we're looking at some of these stocks that are right up at their highs, waiting for some news maybe to come out to make these things bust out. Certainly don't have any problem. I had some good, strong volume on the 13th of this month. with 6.5 million shares, which is certainly into all the candles from all the way back from the December 8th high and the December 23rd high and the January 9th high and the February 6th high, basically into all those candles with higher volume. Yesterday had good volume, 6.3 million shares. Today, not so much, just light volume, up 2.6 million shares, but I am watching that. Another one that's kind of playing up here at these levels is Adobe Systems. You want to be watching this. Volume kind of light. This thing had a huge spike up on earnings on the 12th of December, and it's back into that high. Doesn't look like there's a lot of energy. In fact, the last 3 days, the energy's been coming out of it. $77.56, 12 million shares. Last 3 days, 3.8 million shares, 1.9 million shares. Today, 900,000 shares as it gets into that high. Looks to me like a better bet is a trading range back down to that $69 level. Brookdale Senior Living, another one up here, not coming up to its previous high on lighter volume. The January 5th high, $37.23. What else can you say? 2.5 million shares, and we're kind of toying around at those areas again. 1.6 million shares 3 days ago, 1 million shares yesterday, 500,000 shares today. So a few of these things look like they're running out of breath. Barnes & Noble, which I keep on getting shocked that these guys are even in business. But September 9th, they had 1.8 million shares at 24.62. Got back into it on January 13th with 900,000 shares. Kind of got back into it on a few dojis out here on 180,000 shares the last 2 days, 268,000, 126,000 shares today. Let's take a look at the earnings date. This one really makes me think, March 10th, really makes me think that it's going to be probably something like the whole fossil thing, and that is eventually these guys are going to have to announce what everybody in the world probably thinks about it and knows about it, and that is, how are they still in business? But I do digress. Brocade Communications, BRCD. It's up testing its previous high, January 13th, $12.43, 7.7 million shares. Had 4 million shares on the big candle on the 13th. Yesterday, 5.3 million shares. Today, 5.2 million shares. So we are back at some of these highs, and it wouldn't be surprising to maybe see a few of these things start busting out, but not a lot of energy out here. Continental Resources, again, like I said, a lot of these stocks in energy and other things like it have been making Gartley patterns or coming back and filling gaps, and it certainly looks like fairly light volume for finishing up this gap down in Continental Resources, CLR, where this thing came down on heavy volume the 28th of November with 8.8 million shares, almost 8.9 million shares. Got into it on February 2nd with 7.5 million shares. Got into it yesterday with 4.9 million shares. Today, 2 million shares. Untested high volume low at $30.06. It's those kind of patterns that makes me think that we still have some downside to the markets in energy. And when we get back, we'll look at the Celestica, CLS. And we got plenty of time for you to call me at 877-927-6648 or post a message in the den. Or email me if you're quick typist.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, the market doesn't know what to do out here. It's a little up, a little down, a little up, a little down. Now it's kind of back to where it was. So not a whole lot happening. But again, the market looks like to me it's on hold for information on Greece and maybe a few other things. But that's probably mostly it. Probably going to see that Friday morning. And I suspect maybe a little bit of short squeeze into the weekend. And if we can find the right stocks and the right options on it, maybe make a little bit of money out here before the week's over. Other than that, I don't see a lot moving these markets before the weekend. Probably going to get a little bit more of a pullback, I suspect, tomorrow, waiting on that Greek news. But they'll come out and kick the can down the road one more time, and it'll be Groundhog Day all over again. Again, we were looking at Celestica before we left. This is kind of interesting in that not a huge volume player out here, but light volume stock. making highs out here. In fact, I'm going to just bypass this one and look at another oil stock that I think probably a better idea. This thing had some real tough times coming into about 54 bucks back from November 3rd last year to November 10th to the next high, which is on November 21st. And the biggest volume out there is 1.4 million shares. We're kind of coming into that high once again out here on 630,000 shares. Yesterday, 864,000 shares. The day before that, 1.15 million shares. And we really haven't busted that $54 level. Maybe we get one more day or two more days. Maybe this thing hits 55 bucks for expiration. But I'm going to be watching the volume on that very closely out here. Groupon, what was the one that I was thinking? Oh, it was Angie's List, ANGI, popped the other day. I didn't get to it yesterday. Oh, actually, it's today. Again, this is kind of what we're seeing out here. Stocks with a very high short high short interest on them. And it's popping fairly significantly out here. 20 million shares caught a lot of people unawares that they could have one good quarter. I don't think this changes the trajectory, long-term trajectory. If you've been around here for a year and a half when this thing went public, I was warning everybody about it when it came out that they'd been in business for 15 years and never figured out how to make any money. They're at least stemming the hemorrhaging of money out here, and just too many people, too short of an individual stock. You get a little good news out here, and for the most part, probably the big backers of this stock, all they want to do is find somebody to buy it at any price. If they have to engineer short squeezes, they certainly can do that. But I'm thinking there was just a lot of people on the all on the one side of the trade out here. Makes it awful tough to make money. And could this get back up to the gap up here at $8? It certainly could. But these stocks don't instantly go in and out of business for the most part. And they figured out a way to kind of do a BlackBerry. And that is they're going to hang out here for a long time before they go out of business. Same thing as Radio Shack. They can continue to do a little bit of cannibalism to stay alive. And then they're kind of eating each other. That's what Angie's List is all about now. What can we consume to stay alive a few more days? Anyway, they're doing a little bit better. There's too many people on the wrong side. We'll see you tomorrow. Same bat channel, same bat time. Hang on for the Tom O'Brien Show.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.